Every year, your insurance company sends you a document, usually a couple pages long, and summarizes your entire homeowner's insurance policy. It's called your declarations page. Most people glance at it, see the premium, make sure it's not too ridiculous, and throw it in the trash or in a drawer. That's a mistake, because your Dec Page is the single fastest way for you to gain an understanding of how you're covered. If you uncover any coverage gaps, this is your time to address them. Today, I'm going to do something most insurance agents will never do. I'm going to teach you how to read your declarations page line by line so you can understand exactly what you're paying for. I'm Frank with Iron Legacy Insurance. Let's pull this apart. Your declarations page, sometimes called your Dec Page, is a summary of your policy. It's not the full policy. Think of it like the table of contents. It tells you who's insured, what's insured, how much it's insured for, how much you pay for it, what your deductible is. Every carrier formats theirs a little bit differently, but the information is the same. Once you learn how to read one, you can read any of them. All right, let's walk through this together. I'm going to go through it section by section. At the very top, you'll see your personal information, your name, your address, your policy number, your policy period, so you know what your effective dates are. A good place to start, make sure the address is correct. If they've got the wrong property listed, you could have a claim denied. Next, you'll see coverage A, your dwelling coverage. This is the amount your insurer will pay to rebuild your home's structure. The number should reflect today's rebuilding cost, not your purchase price, not your tax assessment, not what Zillow thinks your home is worth. If this number is too low, you're underinsured, and you might not get enough to fully rebuild after a total loss. Next down the list is coverage B, other structures. This covers detached structures, your garage, your fence, your shed. It's usually 10% of coverage A. So if your dwelling coverage is $300,000, your other structures coverage is likely defaulted to be $30,000. Then coverage C, personal property. This covers your belongings inside the home. It's usually 50 to 70% of coverage A. Look at that number and ask yourself, if everything in my home was destroyed, would this amount replace it all? For most people, the answer is actually yes. But if you have high value items like jewelry, firearms, collectibles, you may want to make sure that you understand how you're covered on your personal property. There are some sub-limits that may apply to things like jewelry. So if you look at your policy and say, well, I've got $100,000 in coverage and I've got a $25,000 engagement ring, I'm good. Well, not necessarily. Look a little closer and there may be some information that you need to know about how jewelry is covered specifically. Coverage D, loss of use. If your home is uninhabitable after a covered loss, this pays for temporary living expenses. Hotels, meals, rental housing. Make sure this is adequate. The last thing you want is to be fighting with your insurance company about where your family's going to sleep tonight if you have to file a claim and can't stay in your home. Coverage E, personal liability. This is your liability protection. If someone sues you because they were injured on your property, this is what pays for the legal defense and any settlements or judgments. Most policies start at $100,000. We typically recommend going with at least $300,000. If you have significant assets, we'd often recommend an umbrella policy on top of that. And coverage F is your medical payments. This is a small one, usually $1,000 to $5,000. It covers minor medical bills for guests injured on your property, regardless of fault. It's meant to handle the small stuff. Think of this coverage as lawsuit avoidance coverage. Now, you'll also find your deductible on your declarations page. This is what you pay out of pocket before insurance kicks in. In Georgia, you may see two deductibles. You have a standard deductible for most claims, and then you also might see a wind and hail deductible for specifically wind and hail losses. A lot of times they're the same. Sometimes you only have one, but you might see a differentiator between what kind of peril and what deductible might apply. This is an important thing to pay attention to. A 2% wind and hail deductible on a $300,000 home means you're paying $6,000 out of pocket before insurance covers anything. If you're talking about a wind and hail loss, usually after your deductible, you'll see your premium. This is what you're paying annually, and you might pay it monthly. Maybe your mortgage company pays it for you. Then you'll see any endorsements or riders. These are add-ons to your policy. Sewer backup coverage is a big one. Scheduled personal property. Building codes coverage, often called ordinance or law coverage. Equipment breakdown coverage. Buried utility line coverage. These are all available but not included unless you actually add them intentionally. If you're not sure what these endorsements are or whether or not you need them, that's a conversation worth having with your agent. Now, here's what I want you to do. Every year when you get your renewal, pull out your Dec Pages and check three things. One, is my dwelling coverage still accurate? Have I made improvements? Have construction costs gone up? You can also do an updated replacement cost estimate if you don't feel like your home is sufficiently covered or if you're just not sure. Two, do I have the right endorsements? Do I need sewer backup? Do I need scheduled personal property for valuables? Three, what's my deductible situation? Am I comfortable with the amount I'd have to pay out of pocket? If you can answer those three questions confidently, you're in pretty good shape. If you can't, it's time for a review. That's your declarations page. Now you know how to read it. And I want you to understand, the reason I'm teaching you this is because we believe you should be empowered to understand your own coverage. We don't think you should have to take your agent's word for it. You should be able to look at this document and know whether or not you're protected. Now, the next question most people have after reading their deck page is how to figure out how much dwelling coverage you actually need. Watch that one next. And if you want our team to review your deck page with you, walk through it line by line and help you understand what you're covered for and what it means to you, I'll put the link below so you can book a consultation with us. I'm Frank with Iron Legacy Insurance. We'll see you in the next one.